Traders, welcome to my Forex Trading signal. Basically, if you have watched my video last week about the negative MACD divergence forming on the 4-hourly chart, you'll find that it has been invalidated this week. Okay, the reason why is so is because of this. As you can see here, last week we say that the price made a higher high. Can you see that? Okay, made a higher high. Okay, let me draw this thing first. Or MACD make a lower high, sorry. Or the MACD make a lower high. But you see that the price actually push upward again and create a higher high. And at this time, right, you can see that the MACD also create a higher high. And this will then invalidate the negative MACD divergence. Okay, that I've talked about last week. Okay, so however, there's a big price movement downwards, as you can see on this chart here. And this is mainly due to the major resistance on the daily chart for this euro dollar. Besides the major resistance, in fact on the daily chart you can see the formation of a negative MACD divergence as well. But before I go to that chart, let me just talk about this chart first. Okay, as you can see here, I draw a black color line here at the 1.38541 level, and this level, as you can see, right, if I string a little bit, you can see that it has been tested before several times as resistance. You can see, therefore it is actually a strong resistance. So as the price break above it, this resistance level has now turned into a support. You can see that the price is being supported a few times, it moved up, and now it came back again. Okay, therefore this level here, right, you have to take note. If for those of you who are holding a long position, you have to be extremely careful, as this level is pretty strong. Okay, so the reason why I say that you have to be careful is because if the price managed to break below it, okay, there will be a big down move. Okay, sorry for the noise because there's a plane flying over. Okay, so now let's take a look at the daily chart. Okay, let me shift this chart down a little bit. As you can see, right, on this daily chart, okay, the reason why the price actually moved down, right, maybe I draw the resistance line to show it to you guys. The orange color line. It's because you can see that this level is actually been tested before. Can you see that? This level, it has been tested before. And as actually, if I string the chart, no, I can't tell how much I string. You see here. Okay, as you can see, this level is pretty important. In fact, there's a lot more at the back that I can't show you on this small screen. Okay, therefore, the price actually moved down. But just now, if you remember, I told you about this negative MACD divergence formation on the daily chart. Now let me draw it to show you. Okay, so basically there's this formation of the negative MACD divergence. As you can see here, the histogram is getting shorter and shorter, which is a sign that the seller is actually gaining strength. Okay, at this point, but the price is now being held by this major support here. Okay, so what we can do here is this. Let's go back to the 4-hour chart. Okay, let's go back to the 4-hour chart. This is what we can do here. If the price hit this level, okay, if the price hit this major support level, and the histogram actually gets shorter and shorter here, this is a sign that the buyer are gaining strength, and there's a chance for us to go long. Okay, because the overall trend for this euro dollar this week is actually up. Therefore, if we are going long, we are actually trading the trend. Okay, so there's a chance if this thing moves down to a major support level and the MACD histogram gets shorter and shorter, there is a chance for us to go long. However, if the price managed to break below this, it will most probably move all the way down until it tests this 200 EMA again. Because 200 EMA is a major support level. For it to continue moving up, it has to test a major support level again before it continues to move up. If it is unsuccessful, the testing is unsuccessful, that means it breaks below the 200 EMA, the trend will then reverse. Okay, so I hope that this analysis is useful for you, and if there's an update, I'll update you guys again.